Obstacles are placed in our way to see if what we really want is worth fighting for. My friends, what do you really want? Do you really want to learn how to chart stocks? Do you really want to learn how to make money in the marketplace? Well, it's going to take you 10 to 15 minutes each and every day to follow these markets, to chart your favorite stocks, the ETFs that we go over, fill out your daily market worksheet 4 days a week, your weekly market worksheet 1 day a week, do practice trades, fill out those trade worksheets. There's work involved here. I enjoy it. I think it is loads of fun. I know that the people who've stuck with me over many months, many years feel the same way. And I want to encourage any of you who are discouraged today, keep it up. You can do this. It is simply a matter of perseverance. Let's jump into these charts. We see the S&P 500 and the Nasdaq 100 both up 0.76%. Want to make sure we're in regular hours. We are. Now, TC2000 is a trading platform that we use. Occasionally I have people ask me, do you have the layout for something else, one of the other, particularly the free online charting platforms? I don't. Most of them don't have the price percent oscillator, the derivative oscillator. They sure aren't as accurate and as easy to use as TC2000. If and when you are serious, you decide to get serious about charting the market, I encourage you to follow the link in the show notes. You'll get $25 off and subscribe to the paid version of freestockcharts.com, which is TC2000. You'll also see we have a free layout waiting for you of what we use every day that you can just simply save as your layout, and boom, now you've got everything you need. Plus, once you really do start trading for real, they have an online trading platform, their own brokerage, which is even more wonderful. It's amazing. Now let's jump into these charts. We'll start first with the S&P 500, nice big green up candle for the week. Price percent oscillator is about flat. Derivative oscillator negative, losing downward momentum. Price percent oscillator is negative. We can see that we had, it moved a little bit on me. I moved that earlier for you. We had a 2-day crossover going up. We had things go down for a while, and now with 4 days of strong movement, we had that crossover. Derivative oscillator crossed over too. This is not a trading time. This is moving in the opposite direction of the weekly, so it's what we call a 2-day crossover. It's not a recross. That would be going in the same direction as the weekly, which is down. This is an up move on the 2-day. 2 days worth of strong up movement, followed by previously we had 2 strong days of up movement also. So we are taken out of any down trade that we might have still been in for some reason. I don't know why you would have, but sometimes it really is for us a shot across the bow when nothing else is happening to tell us, hey, this move has come to an end. It's best to get out. We were told that much earlier here. Look at all these days on the half-day chart of strong up movement. Price percent oscillator. Derivative oscillator is flat right now at the end of the day. You can see where things topped off in the morning, afternoon, about the same place. So again, we'll continue to watch the S&P, keep an eye on things. We'll see if this 2-day continues to move up and causes a weekly vertical crossover going up, or if it dies and it's a 2-day recross going down. That may happen in the future. What about the Nasdaq 100? Again, a big green up candle forming for the week. Price percent oscillator is flat, negative. Derivative oscillator losing downward momentum. 2-day, not enough to cross over. 4 days of strong up movement, but not enough to have a crossover. So we'll leave the line where it is, leave the arrow down, and leave the crossover line where it is, and see if between Wednesday and Thursday, at the close of the market on Thursday, when the next 2-day candle draws, if it crosses over or if it bounces off and starts heading down again. Now, that'd be something interesting for you to look at and potentially practice. How accurate are bounce-offs on the cues? Well, you may have a chance to practice that and see. We look at the half day, again, strong up movement for many days. and the price percent oscillator moving up, derivative oscillator like the S&P about flat. That's where we are on stocks. Oh, I did a great, well, I think it's a good training. It's a training for you that I've put out today. It is entitled Incoming Tide Floats All Boats and Stocks Too. I think you'll get a kick out of it. It's in your show notes. If you're a subscriber, go to chartingwealth.com, sign up and subscribe for free. And again, you get all the special stuff that we put out on a daily basis, plus every day free PDFs for you to print out, a daily market worksheet, weekly market worksheet, trade worksheet, plus instructions on how to use them. Very, very valuable. Let's move on to 20-year bonds. Had gone down strong for 2 weeks. And then, of course, what we have happening this week, last week things slowed down, still reached a little bit lower low. But this week we have a green open box spinning top, almost a doji. Price percent oscillator still ticking down. Derivative oscillator still gaining downward momentum. On the 2-day, we can see where we had 4 days of up movement. These last 2 days have been a slowdown in that, a red open box spinning top. So a slowdown in the up movement. That price percent oscillator still negative. And losing, it looks like it's a little less than flat. And we look at the derivative oscillator negative, still losing downward momentum. Price is below the weekly and the 2-day there. Now we're going to go to the half-day chart. What do we see there? Well, we see down in the morning, further down in the afternoon, pushing through quite strongly the 2-day and the weekly trend line. So keep your eye on things. That price percent oscillator is not crossed over the red signal line going down yet. Looks like it's getting closer. And the derivative oscillator is precipitously losing lots of energy, still barely green. So we'll keep an eye on things and see how they go. That is where we are on 20-year bonds. Let's move on to gold. Yay, gold up a little bit for the day. We look at the weekly chart. Has gold finally bottomed? Don't know. I keep hoping. We saw much higher up movement last week. Again, we're only 2 days into a 5-day candle. We do have a green open box candle. Little wick, it looks like on the bottom, not much. Price percent oscillator negative, but heading up. Derivative oscillator negative, losing downward momentum 2-day. We had the 2-day crossover, and I've somehow lost my vertical line. I will put that in as soon as we finish the program. And we can also make sure, whoops, what am I doing here? We can also make sure to rotate around our arrow. Again, the reason we use all of these arrows and vertical crossover lines and all is because they make it easier for us to see what's actually going on. I'm calling up my drawing tools here. I want to use the vertical line here. I'll go ahead and drop it in on the top chart right there. I then go to edit it. I change the color. This is how easy on the fly you can do things with TC2000. Is that not amazing? Boom, there you go. Didn't even have to wait to the end of the show. What do we see going on though on gold? We can see that this 2-day chart, we have a red, solid red down candle, wick on top, so not all bad, but a long wick on the bottom. Price percent oscillator though, nonetheless, is still going up. That's a good sign. Derivative oscillator heading up too. We can hope, we can dream that this weekly will eventually cross over and allow us to jump back into gold. Y'all know how much I like gold. I just want to see it go up. Interesting what we've seen happen on the half day. We've seen it sort of drop down, slide along the weekly and bounce off a little bit as far as the Heikin-Ashi candlesticks go, but that price percent oscillator negative, still heading down. Derivative oscillator gaining downward momentum. So we'll wait and see how gold sorts itself out. Okay, this is where we are on the 4 big charts. Let's look at Bitcoin. Bitcoin's about flat for the day. This is the New York Stock Exchange Bitcoin Index. There are other things you can track. You can track the Bitcoin Fund. You can track Grayscale Bitcoin. There's about 12 different ETFs and such that you can track various cryptocurrencies. Of course, if you're interested in Ethereum, there's the Grayscale Ethereum Trust. What we've learned from doing this, because you guys asked for it, is things like Bitcoin quite trackable. And what we will do here is jump in. Like I said, Bitcoin's about flat for the day, but up for the week. Price percent oscillator heading up, derivative oscillator heading up on that weekly chart 2-day. Nice green up candle forming, price moving up. Derivative oscillator moving up as that candle closes, reaching a higher high on the 2-day there. And on the half day, you can just sort of see where not much has happened. So the nice news is we had that 2-day recross on Bitcoin, opened around 46,000, somewhere around the $51,000, $52,000 mark, up to a high since that 2-day recross of 62,000. So not bad, not bad at all. Again, if you're interested in Bitcoin, practice trading it, start charting it, learn how it moves, learn the nuances. How do you do that? You just follow it every day like we do. Fill out your worksheets and pay attention. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.